there was a lot of talk yesterday when we actually saw rates move higher, selling in treasuries, that it didn't seem right. It was too thin. And obviously these are issues. But to me, I wouldn't be shocked to see a thin sell-off for many sessions, considering how thin it was and where it ended up intraday low, at 31 basis points on Monday for a 10-year. Your thoughts, Seth?
Yeah, no, so I agree with you, and I think judging from the comments I get from our sales and trading desk, there is a big lack of liquidity in the treasury market. Worse, naturally, in the off-the-runs, but even the on-the-runs are having some trouble with trading conditions. And I think people are really struggling for a couple of things. One, people had on a couple of very specific trades that are now not working. But on top of that, I think people really are trying to figure out where is the bottom, what is the macro fundamental that they're trying to trade against. And that's just super hard because the unknowns are massive.
Now, when it comes to foreign exchange, it certainly seems as though the dollar index is just the epitome of a two-way trade. It basically broke 2.5%, and then this week it's rallied 2%. And to me, the reason is clear. During the turbulent times, there's a big demand for dollars to service debt around the globe, even though there are aspects of the dollar that are going to suffer as the U.S. economy suffers. Weigh in, Seth.
So I think you've nailed it. There are lots of cross currents going on right now with FX markets. If you go back a couple weeks, people were getting out of using the euro as a funding currency. That gave way to the general risk-off move when it comes to the yen. Then there's a general flight to safety across the world. All of those are just causing these violent movements in lots of different directions. Again, as people are trying to find some footing, trying to figure out what are the fundamentals that are going to underpin the medium-term valuations.
Seth, were you surprised that Christine Lagarde and company did not alter rates? Now, many were. I wasn't. To me, I just don't understand the point in going more negative. Weigh in on what you think she was up to, and what is the long-term prognosis for how the ECB is going to deal maybe with the fiscal accomplishments that the UK had? Is that what we should expect from the other 27 countries in the EU currently?
I do think the ECB is in an extraordinarily difficult situation. They already had interest rates quite negative. Our Eurozone economists did think they might get another 10 basis points lower in policy rates, but that would be mostly symbolic to show that they are continuing. I think this also speaks, there was widespread market speculation that there should be a global coordinated monetary policy action, but you're left with banks like the ECB that are stuck and they can't do the same kind of interest rate reductions that we saw from the Fed. So I think the ECB, the board members, the staffers, they are dusting off old memos, trying to be as creative as they can. What can they do to keep things going? And we will continue to hear cries from people like Christine Lagarde and other central bankers that fiscal really is going to be needed at some point.